Ladies and gentlemen, good day and welcome to SMS Pharmaceuticals Limited Q4 FY23 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vamsi Krishna Potluri, Executive Director of SMS Pharmaceuticals Limited. Thank you, and over to you, sir.
Good morning, everyone. Thank you for joining the earnings conference call to discuss the financial performance for the quarter and year ended 31st March 2023. I hope everyone must have got an opportunity to go through the financial results in this presentation, which has been uploaded on the stock exchange as well as our company website. In Q4 FY23, the company delivered a healthy operational result, resulting in a revenue of around 149 crores and achieving a sequential PAT growth of 53% at rupees 8 crores. Sequentially, there was an expansion in operating margins with Q4 FY23 EBITDA margins reaching 16.4%, a gain of 246 basis points. Despite facing severe headwinds in form of low offtake of ARV products, which had a profound adverse impact on our Q1 FY23 numbers, we are pleased to still have managed to retain the top line numbers in FY23 that we had achieved in last fiscal year. This was despite having minuscule contribution from ARV segment, which contributed to just 3% of our total revenue in FY23 as compared to 40% in FY22. This was on account of our ability to successfully pivot to more lucrative product segments. Anti-diabetic product segment contributed about 38% of our total revenue in FY23 as compared to less than 3% in 22. The growth in anti-diabetic products was driven by the expiration of numerous claims patents. Also, the contribution from anti-inflammatory products doubled to about 14% in FY23, by 10% in FY22. So all in all, launch of new products, expansion of high-value product range, and the robust demand in non-ARV segments led to better performance in the second half of FY23. Our FY23 margins were, however, impacted, especially in initial quarters, because of us entering into new product lines, change in product mix, along with structural industrial issues in form of higher raw material costs and volatility in price realization. Towards the end of the year, company has witnessed growth and margin traction. This uptrend in operations performance is likely to improve in the coming quarters. Importantly, also the ARV business has bottomed out and is likely to make significant contribution to our revenue and profitability and growth in FY24. We are expecting healthy orders of ARV products at least for next 2-3 quarters. Our regular portfolio of therapeutic categories like anti-migraine and anti-ulcer are also performing very well. Raw material prices, which remain elevated for majority of FY23, have also started stabilizing now and are quickly restoring back to normality. As the Chinese markets have opened up post the shutdown owing to zero COVID policy, the key areas of focus in FY24 is to improve profitability on each product category. For the same, company will be aggressively focusing on R&D in this fiscal year with an aim to achieve cost optimization of our existing products. In addition to this, there is a healthy demand for ibuprofen, and we are adding new customers across various geographies, which usually takes around 6 to 9 months. So, by the end of FY24, we are anticipating a good traction for ibuprofen product as well. We also have plans to undertake vertical integration of some of our high volume products with an objective to improve the overall margins in the coming years. Some of our API segment highlights in Q5, in FY23 and Q4, revenue for the API segment stood at 146.1 crores and 502.4 crores respectively. Q4 and FY23 API segment contributed approximately 97.8% and 96.2% to the consolidated revenue respectively. Within the API segment, 50% of the revenues came from the domestic market, 85% from the export market, including Indian exports for Q4 FY23. Within the therapeutic areas, anti-diabetic contributed to 26%, anti-migraine 21%, anti-ulcer 13%, anti-epileptic 3%, anti-ED function around anti-inflammatory 17%. The rest contributed to around 12% of the total sales for Q4 FY23. The contribution of the ARV therapeutic category was almost negligible. Our company is strategically positioned to capitalize on untapped market opportunities and is fully dedicated to providing long-term value for all our stakeholders through its sustained focus on operational efficiency and core competitiveness. I am very pleased to say that the future outlook of our company remains very optimistic, and we are on track towards accomplishing our progress. Finally, I would like to emphasize that our dedication to sustainable growth and delivering value to all our stakeholders remains unwavering. We can now begin the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Participants present on the audio bridge who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Nehal Jain from SK Securities. Please go ahead.
Thank you for the opportunity. I had a few questions. First, what are your thoughts on the overall outlook for the pharmaceutical industry in FY24?
Yes, hello. Yeah, sure. Thanks for your question. So, yeah, I think it is a bounce back phase, but I mean, like, it would not be totally, completely, back to the pre-COVID levels yet, but it is slowly in an upward trajectory, is what I could say, then pharmaceutical. I think obviously it depends on the segment, like we are focused more on the API segment. So API segment is starting to see a little more, stability in terms of raw material prices, because like now China, which was shut down completely, has now completely opened up. So, now we are seeing more manufacturers of raw materials come in, and, so we see some stability in the solvent prices as well, and some key raw materials as well. So, as for an API manufacturer, I think it's definitely going to be a year going forward.
Okay, so what will be the key growth drivers for the company?
So again, as I mentioned in my short speech here, so I think the company this year will be focusing on cost optimization mainly, because we were, in spite of having, lost ARV business, which contributed to 40% of our top line. So, but still we are able to maintain the top line of that business. I mean, still we not dipped on the top line. Actually, it's almost, I think it was just over last year as well. So instead, profitability came down owing to, various issues. Now, this year, the focus of the company is to, to invest more into R&D and, into cost optimization, trying to backward integrate, and, especially some of the big products, most of the KSMs in-house, not depending on China or any other source, wherever possible, and try to be more flexible and, get a better realization profit. That is the focus of the company this year.
Okay, understood, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Naitik Mohata from Sequent Investment. Please go ahead.
Thank you for the opportunity, sir. So my first question would be our CRAMS business. So what is the outlook for our CRAMS business in FY24?
So CRAMS business is asking with respect to the like ARV segment or general CRAMS in general?
In general, sir.
So generally CRAMS business is a very small contributor to our revenue. In the past it used to be there when we were, this was few years back, but generally CRAMS is a smaller contribution in our revenue. It will probably be less than 3%, 3 to 4% only.
Okay, sir. And my second question, sir, what are the prices for ibuprofen right now, and what kind of scenario does it look for in Q1, as well as what was it in Q3 as well?
Sure. So ibuprofen, when we launched like last year, I think the prices for the thing is that we are a new entrant to the market. Now that we have obviously an established player, commanding a significant market share. We were the new entrant in the market. So obviously, I think we had to go aggressive and, try to get some market share. Now the prices have sort of stabilized right now for ibuprofen. And obviously, I think we are now on the qualification of many other customers in US, Europe, across many geographies in the world. So this will take around 6 to 9 months time for them to completely finish qualifications, they get approval from their respective agency, and they start taking commercials. So our price, all these regulated customers, pricing is a difficult question to answer because each market has a different pricing. So, it's not a generalized answer that I could give you, like what is the price of ibuprofen today. So it's in that $10 range, plus or minus, based on market, but it's in that range of $10, yeah.
And so what kind of trend do we see? Like, do we see the prices increasing?
So it will probably be stable, to be honest with you. I think it will be as we are right now. And maybe see, again, we cannot predict, but there could be a couple of months where there could be some shortage or any issues with any other suppliers. Then suddenly it could be a good month where ibuprofen prices could reach $12 or $13. And again could come back to again $10. So it's a cycle that happens typically. You cannot obviously predict, but we will be ready. We are focused on this particular product especially because we've invested quite a lot in this product, and we really want to make this product a very strong growth product for us.
Okay. Thank you, sir.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Akash Mehta from Capus Investments. Please go ahead.
Hi, sir. Good morning, and thanks for the opportunity. I had a couple of questions. First thing, do you intend to develop new capacities or undertake any sort of brownfield or greenfield expansion going forward?
Can you please repeat your question? I think we were not able to hear your question.
Am I audible now?
There's a lot of noise actually. Yeah, if you could just speak a little away from the phone.
Yeah, I was saying, do you intend to develop any new capacities or undertake any sort of brownfield or greenfield expansion?
No, at this point of no. We are not looking at any greenfield or brownfield expansion at this point.
I'm sorry to interrupt. This is the operator here. So we are not able to hear you very clearly. Give me a moment, please. Our participants are requested to stay connected. We have the management line back on the call. Mr. Mehta, you can continue.
Yes, on the brownfield expansions, we're not undertaking any, right?
Yeah, so we no plan to take any greenfield or brownfield projects at this point of time. As a company, we would like to consolidate. We would like to consolidate before taking up our next project at this point of time.
Okay, and any details on the capital expenditures for FY24? an asset?
It's a regular normal plant CapEx, nothing extraordinary out of it. It's a regular maintenance and, regular CapEx.
Right. And the last question I think would be, do we intend to increase the percentage of our API revenue derived from the domestic market going forward?
We cannot hear you. Can you speak up a little bit?
Do we intend to increase the percentage of our API revenue from the domestic markets going forward?
Your question is, are you going to increase API revenue from the emerging market, is it?
Yes.
Yeah, definitely. I think especially ibuprofen, we are trying to use that as a key driver, because we will get entrance into many countries, and that is a critical aspect. We are definitely we are targeting a lot of semi-regulated and non-regulated countries as well with our ibuprofen. That creates open channel for some of our products to also go in the same channel.
All right, that helps, sir. Thank you.
Thank you.
Thank you. We have our next question from the line of Dheeraj Sachdev from Roha Asset Manager. Please go ahead.
Yeah, hi. There are different segments that we are operating in, which includes ARV, CRAMS, API, IBU, and the margin volatility can happen in either of the segments. So, based on the capital investment that we incurred a couple of years back, which was pretty heavy, on an overall basis, what could be the blended, sustainable, conservative bottom margin that we can expect? I know it is very difficult to predict across, but then on a conservative basis, what are the things that we are looking at considering at $10 IBU prices as well?
I think there will be a growth. We are expecting a growth of around 20 to 25% on the margins from this year compared to last year.
Yeah, but I'm talking about from a quarter basis because we did about close to 15%. What could that number be?
Yeah. Sir, 15 EBITDA margins, we are going to be increased by maybe another 250 to 300 bits.
Okay. And on a volume basis, what are the things that we're looking at? What kind of volume growth we are looking at?
You mean to say the top line?
Yes, volume growth.
Top line is already told, na?
I think on the top line front, I think we'll be retaining more or less more than what we are doing in the current quarter. So the trajectory is a little on the upper side only.
Okay.
On a year by year, I think we are looking at least a 20% growth this year compared to FY23.
And given that ARV was actually low as a mix, if it comes back, will it still, are you still confident of maintaining margins higher by 200 basis points?
Yeah, of course. See, again, last year I think there were no ARVs, but still we managed to retain. But now I think with ARVs coming back and getting good orders, I think we will be able to get a better realization on the top line and the margins as well.
And what is the overall capacity utilization at this point of time?
So at this point of time will be around 70%, approximately 65 to 70%. Yeah.
So you're talking about finally virtually about 20% kind of top line growth with about 17% blended margins, right?
Yeah, could you repeat that question?
So you're finally talking about 20% top line growth and close to 17% EBITDA margin.
Absolutely. Yeah.
Okay. Just finally, I may have missed it, but what's the capex or new product or anything that we are talking about?
So again, we have not planned any major capex this year because we want to consolidate, cash flows and get some good revenues out of it. And then we probably maybe in FY25 maybe we might plan for a capex based on FY24.
Okay. Fine. Thanks and all the best to you.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. We have our next question from the line of Sajal Kapoor, an individual investor. Please go ahead.
Yeah, thanks for the opportunity. I've got a couple of questions. First up, how much of our asset base is fungible? So we have got 3,000 KL at Vizag and a much lower capacity at Hyderabad. More interested on the Vizag side, how much of that 3,000 KL is fully fungible and we can switch between molecules?
So again, our Hyderabad site is almost close to 90%, 85 to 90%, fully occupied. I don't think we will be doing any more expansion there, or we'll be adding any new products there. So it's almost 90% is occupied. So coming to our side, see, it is a big size. It definitely depends on the product mix, right? So based on the product mix and product growth rate, I think as mentioning, right, 65%, I think right now is the current occupancy in that plant.
No, one thing, I'm not interested in the current capacity utilization of that 3000 KL YZ site. I'm interested to know whether you can switch. So, for example, if in a given reactor you are making sitagliptin today, can you use the same reactor to make levetiracetam?
Yeah. See, we have multiple blocks with multiple, like we have A line, B line, C line, D line, multiple lines there. Each has its own, like one of the lines has 4 clean rooms, one line has 2 clean rooms, which 2 products parallelly can be run, something like that. So it's a different mix and combination that we can definitely take up here, based on the scheme and which reactors are suiting for which product. Yeah.
Yeah, exactly. So if we lose competitive, so there is no demand for a certain API. Let's say scenario that happened with the ARV.
Yeah. Those reactors can be used for other products.
Exactly. So that and we are going to maintain the R&D intensity to make sure that we continuously innovate and continue to diversify, and we don't go back to the same scenario where we are got dependency on a certain class of products like ARV. But we have done good work in sort of diversifying away from ARV.
Absolutely. So again, our R&D is generally working on a lot of products and different therapeutic categories as well. So if you see our this year segment, I think it is almost, say, for example, like this year contribution from anti-migraine was 26%, contribution from anti-diabetic was 26%, anti-migraine was 21%, anti-ulcer around 14%, anti-aseptic 3%, anti-inflammatory 70%. So that 70% was ibuprofen. So we are expecting that to grow up to around 35%. So if you see more or less everything is that, so we are working on different trends. We expect the ARVs to come back to at around 20% again. So, we are diversifying, and we are, at a single point of time, focusing on multiple therapeutic categories now.
That's helpful. And the other question that I have is, if you go back to pre-COVID era, so I'm talking about 2018, 2019, our gross margins were very similar to what we have reported in the March quarter in FY23. And our operating margins back then were 19-20%. So the question is, has the industry structure changed so much that we cannot go back to those pre-COVID, or given the product diversification and the R&D that we have done since, we are confident that once we start fully utilizing our asset base, we can actually get to 20% margins where we were before COVID?
Yeah, I think it's definitely, but a lot happened overnight. It is a gradual process, obviously, because of COVID, a lot of stocks being piled by the customer side, lack of demand from the customer side, has gone for a reduction in prices, and just trying to move the inventory from our side. Because of all this, we were not able to get those types of numbers in terms of margins. But over the next 1-2 years, I think that is definitely a possibility of going back to that 20% number.
Sure. And how many scientists do we have in total today between the CMO and our own filings put together?
How many DMS?
No, how many scientists, how many people we have on the R&D side between the CMO? So we do CMO for B2B business as well as we have our own filings, right?
Around 30 people.
How many?
Around 30 people.
Sorry, I missed that number?
30 people.
30 people, right.
30 people in process R&D. No, 30 people in process R&D and around 20 people in the analytical R&D.
Okay. And how do you read the emerging opportunity in the CDMO space? A lot of companies like Tube Investments and Nirma, who are traditionally not in the API manufacturing. So they've got no past experience in the API manufacturing. They are now talking about entering into the CDMO space, working with the innovators on the intermediate side to begin with, and then eventually graduating from intermediates to API. And given our track record of 3 decades, why is it that we are not actively looking at?
No, I think that is also one in the next 2 years. I think that is also one of our major goals. We also are evaluating on that space. So which segment would be the right choice for us? We are still debating that internally. But definitely, I think we are also having plans to do opportunities as well. So for sure, I think in the next 2 years, we will see us also progressing in that direction. Obviously, our major bread and butter probably will be the API sales. But definitely, I think that's a good thing to add revenue to. So we definitely have plans to move into this in the next couple of years.
Wonderful, wonderful. Thank you so much for all the responses. All the very best.
Thank you so much.
Thank you. A reminder to participants to press star 1 to ask a question. We have our next question from the line of Jigar Shah from AK Securities. Please go ahead.
Yeah, good morning, sir. So I have a couple of questions. So how is the company planning to improve profitability on each product category? And can you please elaborate more on the company's plan for vertical integration?
Okay, so I think the plan to increase the profitability on products is the natural thing is probably doing a backward integration and trying to make most of the intermediates and key starting materials in-house. So that's what the company. So this year, most of our R&D focus will be in that direction and process R&D and trying to better the process that we currently have and try to increase the margins going forward. So that's the major aim of the company this year, to increase the profitability.
Yeah, correct. So my next question is that what are our FY23 R&D expenditures and what are our key focus areas for R&D in FY24?
Okay, so major focus for the R&D is cost optimization. The second, the thing is we are planning, we are looking at a little new therapeutic categories again. Obviously, existing therapeutic categories, I think we are dominating in some of the segments. Apart from this, we are looking at some new therapeutic categories, like the PMs and few other therapeutic categories that we are looking at in R&D. So you'll probably, maybe a new product list is new R&D product list. We are in the process of preparing the R&D product list.
Yeah, correct. Thank you, sir. That's all from my side.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your phone. We have our next question from the line of Jia Shah from Wealth Securities. Please go ahead.
Yeah, hello, sir. I have a couple of questions. The first being on the capacity utilization. So what is the projection for FY23 and what are the target levels for capacity utilization for 24?
I think we've already answered this question. Right now, I think it's around 60-65% capacity utilization. I think the target is to do around 75-80% next year, before going for any others on greenfield project forward.
Okay. So I also understand that, some of our raw material prices have stabilized in the recent past. So how has this impacted our cost structure and how will it impact our margins in the coming quarters?
So again, as I was mentioning, so now it's stabilized. The prices, raw material prices, especially solvent prices, because of the war, there was a lot of fluctuation. And now they seem to have stabilized right now. So at this point in time, definitely I think we are trying to, we are gunning to that 20% EBITDA margins that we had pre-COVID time. So definitely, as I was mentioning, the previous caller also, it will not happen overnight, but in the next 2 years' time, I think we definitely should be there.
Okay. And just a last question on ibuprofen. If you could throw some light on, the current capacity, the expansion plan, the pricing and the volume growth that you are expecting in domestic as well as in export markets.
So right now we are operating at 300 commercially, operating at 300 metric ton commercially right now. And in the next 6 months, we have received more approvals. We are looking at around 700 tons per month. And with a very minor investment, I think we can take it up to close to 900 tons.
Okay, all right. That's it. Fine. Thank you.
Thank you. A reminder to participants to press star and 1 to ask a question. We have our next question from the line of Deepthi Kothari from Kothari Securities. Please go ahead.
Good morning, sir. Thank you for the opportunity. So my first question was that can you provide more details on the factors that led to the sequential improvement in operating margins in Q4?
Yes, as I was mentioning earlier, I think it is definitely the stabilization of the raw material prices and obviously the product mix that we've changed. And as year has gone by, I think we are working on some KSMs and some raw materials, trying to get that in-house to reduce the cost, raw material cost of the product. So those led to a better margin profile.
Okay. And so the second question is on the antibiotic segment. So the antibiotic segment's revenue share has been exhibiting significant growth in the past few quarters. So what is your outlook for the performance of this segment in FY24?
So definitely it's a very good segment for us to be in, and we are one of the largest exporters out of India of this segment of India. So definitely I think we have a good projection going forward as well for 20.
Okay. And so you mentioned that the ARV business has bottomed out and it is likely to make a significant contribution to your revenue and profitability growth in FY24. So can you provide more details about your plans to grow this business?
So again, ARV, I think we've recently added 2 more customers as well on the ARV space, and now I think slowly the orders have started flowing in now. So again, we could see a decent contribution. We would like to limit that contribution to around 20% only on the company. So definitely decent contribution started happening in the next couple of quarters. So now I think the ARV business looks to be on track to be back.
And so can the ARV business achieve scale similar to pre-COVID levels?
That we cannot guarantee, but definitely again, as I said, it's a slow process. It will take some time, but at this point in time, we cannot comment on that. And see, because it's a tender, we don't know who will be awarded the tender, and there's a lot of ambiguity who to get the tender and things like that. So based on that, we cannot commit to it saying that it will be coming back to the pre-COVID level.
The participant's line is disconnected. Ladies and gentlemen, to ask a question, please press star and 1 on your phone now. To ask a question, please press star and 1 on your phone. We have a question from the line of Vibhor, an individual investor. Please go ahead.
Hi, sir. So I have one question, which is regarding the growth potential which you have from the other APIs and from the ARV segment. So you mentioned that around 20% growth is expected for FY24. So will it be on the steady state business, or does this also include the ARV contribution?
Both. I think from our existing growth as well, also the ARV business and our similar products are taking off and new approvals coming in. Also, I am getting more traction.
I'm sorry, sir, you're sounding muffled. So not very clear.
Is it okay now?
Yes, please go ahead.
Yeah. So I think it's both. The regular ARV coming in, our anti-diabetic segment, and ibuprofen also will be improving quarter by quarter as well. Adding on more customers. So I think it's a combination of all these. I think we are expecting 20% growth, not 30. We were mentioning around the 20% growth.
Okay. And what will be the margins of the ARV segment?
EBITDA around 15%, approximately.
Okay, 15%. Okay. And this is mainly tender-driven business, right? So you are expecting to win some tenders, or you have already won?
I mean, see, again, we are not bidding in the tenders because we are just an API player, so competitors who bid for the tender.
Got it. Yeah. Understood. Okay, that's all from my side. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand over the call to Mr. Vamsi Krishna Potluri for closing comments. Over to you, sir.
Thank you everyone for joining us on this call. Please reach out to our consultants, strategic growth advisors, or us directly via our website if you have any further queries. Thank you so much. You may disconnect.
Thank you, sir. On behalf of SMS Pharmaceuticals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.